Man, back again. We are live today, man. Try to do something new today, man. We try to do some live from the cafe here. I got the. Sorry, we're a little bit late. We had the rain just dump on us, man, just enormously. It's rainy season still here until about October. So we've been trying to get set up here, man. I can sit up here for about 30 minutes. Take a little bit of time, clean off the tables, and because it was just rain all over the place, man. It was just like buckets, man. I think it dumped like about 2 inches in about an hour, which is pretty normal for rainy season here. But at least it doesn't rain all day. I was in Japan about a month ago, and man, their rainy season it just is dreary. Rains all day. Here it's just like dumps and it just stops. But anyway, topic at hand, man. We talking about the crypto meltdown, man. Actually, this is a global meltdown. There's a confluence of things, man. This is happening today in the news. It's just really abysmal. I mean, we've got 20, 30% dumps in some of the big cryptos. Um, you know, man, Ethereum, I think the last time I looked, it was like almost down like 700 for the day. But, all of this is triggered. So I talked about this before. The global economy is all tied into the U.S. economy. The U.S. economy kind of triggers stuff, and it reverberates around the world. Like what we had the other day that came out, and this was pretty telling. The jobs report came out. Joblessness claims went up in the U.S., and it triggered something that a lot of people that's already in the know about economics trigger something called the ROMS rule, and or the Psalms rule, I should say. Psalms rule. Psalms rule basically says that. Share this to the screen so everybody can see this. Psalms rule basically says that. Hold on 1 second. I'll pull this up here. Basically says that if you have a period of 3 months where the unemployment is a 0.5% or more higher in the 3 month average than it was the previous year, that is going to be a automatic indicator of inflation, of recession. And so the Fed and how they've been trying to do this balancing act. Okay, we're going to raise the rates. We need to make the inflation go down. We're going to raise the rates. We're going to raise the rates. And they've been trying to time this the correct way to so-called get a soft landing. And it's, I don't know, the unemployment ticked up like almost a full percent, 0.9% for the month in the U.S., which is a pretty fast accelerated rate, for a whole, almost a percent in 1 month. And if you got stuff moving that fast, man, you never know what's going to happen next. So there's a lot of fear in the market. This happened last week, but I'll pull this up here. Sorry for the delay. I'm trying to pull this up so that we can see the Psalms rule. The Psalms rule and the charts here. I apologize. This is my first streaming here. We've got. Okay, maybe I'm not going to be able to get it. Sorry for that, guys. This is what Japan's doing. This is the first reaction. Now, Japan had already dumped about. It announced they were dumping. I don't know if they've done it already. They've already announced that they've dumped about 23 in U.S. Treasuries, and they've been kind of teetering on the brink of things as well with their economy. But they dumped the Treasuries. They're supposedly going to dump the Treasuries soon, or were to do it soon. But things have actually probably accelerated. Their negative outlook on their economy, which is why you see that they've had like the worst day on the stock market in decades. Um, you go down the list. There's article after article after article about it. And of course, since Japan is ahead in time for the U.S., I mean that's I don't expect that the U.S. is going to open this morning with anything that's going to be any or much different than this. I mean, there's some sectors, technology and on the Japan stock market down 11%. Industrials across the board 13%. I mean, it's 11 to looks like the worst was 17%. Wow, the worst sector. So yeah, it's just a really terrible day. But that's also affected the stock market. You got some people that come out. There's an article that came out today. I don't know why they tried to blame it on crypto, but crypto markets are feeding off the larger market. This correlation came into being about 3 or 4 years ago when all the crypto. So you can't say the converse is true because events. The U.S. economy is the driver of the global economy, and when you have all these negative things going on with the jobs, and the unemployment, recession fears, the Psalms rule. Now, the Psalms rule goes back to 1970, and it has been 100% correct. And try to pull up this chart for you, but it actually shows how the joblessness is 100% is 100% indicative of the correlation. I think we went up to 4.1% from 3.5% from last year around this time, and so that's 100% guarantee. If you're using the Psalms rule, it's 100% guarantee since it's over 0.5%. 100% guarantee, according to this rule, going back 54 years, that there's going to be a recession looming. And so, all of the financial bigwigs have made their adjustments to their portfolios. They've moved this, they've sold these stocks, they put their money in this. A lot of investors have actually moved their stuff to cash. One of the smartest guys in Wall Street or in stocks, period, one of the biggest investors in the globe, Warren Buffett. I mean, this guy was on top of things. He actually cashed out. He started cashing out Bank of America stock about a week and a half ago. He did it for like a week straight, just dumping. I think he got up to about $4 billion in Bank of America stock from his Berkshire Hathaway's fund. Then he started dumping Apple. Now, Apple has actually made that fund the past 15 years, and this comes from a guy that didn't like technology. So, for them to get on board Apple about 14, 15 years ago and ride it out, and actually it's been a huge part of their portfolio. I think it was close to like 30, 40% at one point. But for them to dump Apple, I mean, that's just a telltale sign that, something is really going to happen in the U.S. economy. But 277 billion in cash they're holding right now. So they don't trust the equities market at all. They're out of it. But yeah, Warren Buffett, 99 years old. I think he's 99. Man, he's still calling it. He's still calling it. He still got it. They seemed like he must have had some inside info because he got out quick. He got out last week. Everybody else got caught holding the bag, so to speak. But yeah, all the crypto heads, man. I think we're in for a rocky few months. Quarter four after the halving has been a great time. So I think we're past the worst of it. If you have any cash on side, boy, this is a good time to. It's definitely a good time to buy the dip, man. We're looking at uh we're looking at some very low crypto prices, phenomenal. Man, look at that. ETH down 23% for the day. Bitcoin 17%. Wow, this is unheard of. I think one of the top 100s I was looking at was down about 35%. Look at the nearest 26%. Oh man, I think the worst one was I think the worst one was either Bonk or Pepe. Yeah, these meme stocks really move. When they move up and down. Oh, there it is. Pepe. Where's Pepe? I just seen it. It's 27%. Yeah, we're in some very very negative territory. But yeah, if you got any cash on the side, this is definitely time to buy, man. Of course, it's not any financial advice, but yeah, if you're just a holder like me, this is just another day. Just another day to observe and relax. But yeah, we got on the bright side of things, like I said, quarter four after every halving. This is a 4-year halving period. Just occurred a couple months ago for Bitcoin. It does every 4 years approximately. But quarter four has always been bullish. Now October might be the start, but yeah, August is always kind of it's always historically it's kind of negative anyway. But you got all these geopolitical stuff going on. It's just not. I don't think it's just a jobs report. We've got pending um, attacks going on in the Middle East, and there's a really big fear of a major war breaking out there. You got 3 or 4 countries that's riots. I looked at the news. They had a Bangladesh. Bangladesh had a protesters in the street. They stormed the prime minister's palace, and the prime minister had to flee. So you got all these geopolitical things going on as well. I'm not saying that has the major effect. The major effect, of course, is the U.S. economy and the outlook and the recession fears. So it's going to just drag down the whole world economy, man. But Powell and his bunch with the Fed, man. I don't know if a lot of the analysts, economists were saying, look, they've held the rates too high for too long, and it's instead of helping things, it might be helping inflation a little bit, but they're going to end up running into the danger of just taking the whole global economy, and that's not going to be good for anybody. So let's yeah, this is just I'm pull up this other graphic if I can, man. This is just insane what's going on. They've also got some riots going on in Venezuela. You've got some other geopolitical stuff going on again with Nigeria. And of course, Kenya's been going on for about a month or two. So, you know, if you're a holder, definitely hold. If you're a trader, be careful, man. One person say, catching this stuff right now is kind of like catching a moving knife. So, yeah, we're in for some volatile time. But this dip that we have in this chart, it kind of reminds me of the COVID dip, because during COVID, that that spike down was almost identical. And if you caught the absolute bottom of that, you were you'd probably still be in profit. So yeah, this is really an amazing time. But yeah, one other thing I wanted to share with everybody. I'm gonna make this one short and sweet because I'm actually outside right now. Looks like we have a lot of stuff here. Pull up here. If I can pull this up. One of the things I wanted to share with you also was the outlet. We have a couple things that's coming up that's looming that I think will be promising. One is the prospect of having a rate cut. The rate cut is has been a very contentious thing being discussed in America, especially in the political scene. The Of course the Republicans are saying, they're just doing this to make Trump look bad. Of course, Trump's not in power, so I don't know how that has any bearing on anything. But the of course the Democrats are saying watch his words very carefully because he knows that everybody's hanging on every word and analyzing, overanalyzing what he says. So for the Fed chair to come out and say something, he's always on edge and very guarded with what he says. But he had said something a few months ago that kind of signaled that he was going to wait until after the election. I guess he's trying not to sound like he's political or being political, but if the unemployment is tanking at like 1% a month, or is just I mean unemployment is going up at 1% a month. I mean, he's going to have to call an emergency meeting. They're going to do something because if they wait until the election and we're doing 1% a month, I mean that's what we're at 4% now, 5%, 6%. We got 3 more months. We're going to be at 7% inflation or joblessness in the U.S. by then, or if it accelerates faster, it might be worse. So, these are things that I think that they need to take heed to. But yeah, here's this thing with the Psalms, bro. I finally got it. Yeah, this chart is actually pretty good. This is the unemployment rate chart, and the 3 point average. The 3 point average that goes up above that a 0.5% more than the current unemployment rate, and supposed to be inflation automatically. So we're at 4.1 in America, and it was 3.5 last year. So it's over zero point 0.5. That's it. It's a telltale sign. Um, we've got some other stuff now. If Bitcoin, some analysts say if Bitcoin goes below 50,000, which yeah, they say that it could face even a tougher sell-off, and that's kind of a scary thing. But hey, been in this market for years, things happen. So we're at 50%, 50,000 Bitcoin. That will actually put us. Yeah, we would actually be. Say it's 20% for the year. We're at 51 right now, so it's not out of the question. But yeah, there's analysts that actually said that if we get there, we're going to be in a very bad space, and we might even go down further. So these are some of the things that could happen, and this is analysis by 10x Research. So we don't know. We don't know. We got couple other things that I wanted to discuss before I get offline here with our first live. We've got uh, we've got a prospect though, which I think is pretty promising. And I know that there was some political analysts that were saying that this all of this negativity in the crypto market was due to the prospects of Trump not being elected. Of course, Trump, I really don't have a positive opinion about him or his challenger, um, so to speak. But one promising thing is, since his opponent in the U.S., Kamala Harris, of course, since the Democrats have been largely anti-crypto, especially people like Elizabeth Warren. Um, One of the promising things is she's supposed to be holding some meetings with some high level, and who knows what's going to come of that. I don't know. Maybe this is just a show. You know, Politics in America. I mean, there's a lot of people that are doing things. It just doesn't make any sense. Um, of course, if you're well in America, you know that. A lot of these people say stuff and then they do something different. Unless you're a $1 billion donor, the chances of them doing what you want are kind of up in the air. But of course, Trump gave a speech where he was saying that he was going to do this, and do that, do this, and do that. He makes a lot of promises. For somebody that's been fact checked and quoted as saying things, over. Last time I checked, it was like over 3,000 things when he was in office. He said 3,000 things that were false or misleading. Who knows what's going to happen and whether he's going to follow through on what he says. So that's neither here nor there. We've got a beautiful thing about crypto. It's not just all influenced by the U.S. market, and we've got other factors that are coming into play that are actually very bullish. Um, there's one analyst that's even said that this since the outlook of everything is going so bad, there might actually be some rate decreases, interest rate decreases in the U.S. by Powell. Um, that remains to be seen, but there is a possibility. So we've got a lot of different things that might happen, but we'll see. Um, with that, I'm gonna go ahead and end this because we've out here outside in the elements, man. I've just wanted to make the announcement on these current events. But yeah, everybody just keep it. Make sure you stay tuned and give us a like and subscribe and share, comment, tell us the topics that you want to discuss, and make sure you keep tuned. We're going to keep you up abreast. We got some more interviews coming up. We have some more for the beginners out there. We have some more beginning videos, and then on top of that, uh, we're also going to be giving some analysis on some upcoming projects and inside